All right, awesome. Thanks so much, David, for having me on the show. Great crowd. I know it's an incredible week there of presenters and education. So I hope everybody's soaking it in. Do me a quick favor in the chat room. If you guys can just let me know, you guys can hear me okay, and see my screen. I appreciate that very much. Perfect. Okay. All right. So my name is Silas Peters. I'm the founder, head trader of Trades Trading. Very excited to be sharing this unique strategy with you today. I call it my 15-minute trading blueprint. And I've been using this for the last 20 years or so, and it continues to crush it. And the best thing about it is its simplicity. This is a mechanical, stress-free, emotion-free trading method that can be applied literally on any market or time frame. And in all honesty, if I was using this about 20 years ago and I'm still talking about it, still using it. In fact, it is my number one entry confirmation tool I use every day. Something must be working. So I'm excited to be sharing this with you today. We must cover the risk disclaimer first. Past performance is not indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So, i.e., you guys and gals know that you can lose money in trading, so make sure you only trade with risk capital. Now, I'm going to ask you, what do you trade? You guys trade stocks, options, futures, Forex. I want to see kind of the crowd that we're dealing with here. So I trade stocks, options, futures. I'm most heavily in futures and options. I will trade these occasionally, but my point here is that what I'm going to share with you today is highly accurate, works in all markets and asset classes, all time frames. It's 99% mechanical, perfect for small accounts, and it is simple. Okay. And now I've used this strategy with $2,000 accounts, $20,000 accounts, $100,000 plus accounts in every market situation. 08 financial crisis, roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, you name it, from scalping and intraday trading to swing trading for a few days and position trading for weeks and or months. And you can do this with small or large accounts if you wish. And it can take as little as 15 minutes a week, depending on your situation and your lifestyle. Now, before we dive into all this, I'm going to quickly introduce myself, who I am, and maybe why you should listen to me. Other than that, I'm just a simple dude. I'm a family man who thoroughly enjoys being a two-girl dad. I've got a strong passion for the market, strong passion for golf, cooking, the outdoors, and Alabama football. But this is where it all started, the great city of Chicago. It's here where I cut my teeth into commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working the Asian, European, early New York session trade desk, trading for our hedge fund, trading for across the CBOT, Merck, NIBOT, NYMEX, various London Asian exchanges, handling some enormous size. We're talking 300 lot bond orders, 400 lot big S&P orders, 100 lot gold option orders, 250 lot Japanese government bond orders. Such an eye-opening experience to see how the biggest traders, market makers, and funds were trading and making decisions. And so I did this for a while, soaking up everything I could, anything and everything market related, acquiring multiple futures and securities licenses. I was a sponge. But then my college sweetheart and now my wife of nearly 20 years talked me into coming home to settle down and start a family. So we headed back down south. I immersed myself into the quieter side of finance, helping manage equity and fixed income portfolios in this glass building right here. Then went and did some investment consulting for a private family office, about $2.5 billion that we managed there. And during this journey, I managed to stay in the market, specifically the commodity markets, running and owning some brokerage units, and then starting my publishing brand in 2016. And it's here where I found my real calling. It's here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. And today I want to help you too, but let's quickly go back to the journey. The journey wasn't always easy. It was a learning curve, several obstacles and hurdles on the path to where I am today. First step, obviously learning. School cannot teach real life experience in the markets. I made money, made a substantial amount of money. Was I lucky? No. But ignorance and greed cost me my profits. I blew up an account, blew up others in what I like to call revenge trading. And those were all very humbling experiences. I had almost given up, almost quit. Nothing seemed to work. Always seemed to be on the wrong side. But guess what got me back in the game? Now, I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago. And I got back on track. I started banking wins again. I'd gone off the reservation looking for that elusive holy grail, but my journey ultimately led me back to where I had first started. And it found overall consistency by working a repeatable process. Now, who here is or has been a victim of paralysis analysis, or per Wikipedia, it's the state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the research they thought they could, all the analysis, they've got their finger on the mouse, ready to pull the trigger, and then what happens? Jim Cramer says buy when you're about to sell, maybe this line cross this line, and then all of a sudden you're stuck, you're frozen, and you miss out on the opportunity. Well, we know trading is not easy, but we can simplify. We're going to simplify the process, and I think once I have in store for you today, it will be self-liberating. So my promise is this, is that we're going to learn a simple and mechanical setup together that is repeatable regardless of the market or time frame. Now, let me paint kind of a quick picture here. We know that a market, a stock, or a futures, whatever, doesn't go straight up or straight down forever. They go down in waves, up and down in waves. And literally hundreds of millions, billions of dollars have been made by smart traders recognizing these trends. At the same time, that amount of money has been lost by those who think they knew what they were looking at and then got it wrong. So right now, I'm going to show you how you can get on the right side of these moves, because I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. So I'm going to teach you here how you're going to be able to locate moves like this short here, this long here, this short here. And this is a daily chart of Halliburton. You say, well, this is not sexy. This is, a 10% move, 8% move, 12% move. When you're reading your penny stock newsletter about, 18,000% or whatever, but these start to add up. These start to add up. $1,100 on 100 shares, $600 on 100 shares, $2,000 on 5 option contracts. Here we are on Bristol Myers. I'm going to show you how to find this short, how to find these longs right here. We're talking $400, $800, $900 on just 100 shares. They start to add up. And then Lockheed Martin. Okay, I'm going to show you how to identify this short, identify this long, how you can identify this long, and how you can do this with options. Okay, futures traders. This is a 30-minute chart of gold futures. All right, this is $800 per contract, followed by $450 per contract. This is a 5-minute chart of the E-mini S&P. Who are all the day traders in here? We have 3 points. We have 8 points. We have 6 points. We've got 10 points in a single session, okay? You start to see the potential because all we're doing is trading price action at the end of the day. Those 610 tick chart on the 30-year bonds. 610 tick chart finding simple, repeatable patterns that happen every single day. And the pattern is responsible for identifying these moves before they happen and also let you know when to get out. Now, with all the examples I've shown you, you ask, is it really this simple or too easy? Well, again, trading is not easy. It's not easy, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff. Indicators, red light, green light systems, Greeks, alert services, robots. Most of it was garbage. Single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on pure price action, that is when it clicked. It all started clicking. And so if you're sitting here as a new trader or maybe a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anyone can learn, and you'll keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. Price action pattern we will be discussing today is, drum roll please, the 1, 2, 3 pattern. Who here is familiar or has heard of the 1, 2, 3 pattern? Let me see in the chat. Probably a lot of you, also referred to as the 1, 2, 3 top and bottom. And a lot of yeses, some nos, but this is one of the most fundamental technical patterns in the textbooks. We're talking technical analysis 101, but highly, and I mean highly, overlooked by most traders. Why? What is the reason? I think because of the simplicity. Now let's talk about the setup. A setup is price action based, and guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's has tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on and on until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store, and they open one up across the street or down the block. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the Wall Street traders and institutions and all the large money do all the research on which markets to buy and sell. But all we have to do is look at price action, which takes into account all of their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, setup is price action based. So the pattern is comprised of a low and a higher high and a higher low and a break of that higher high. In the case that we're going long, same rules apply, but inverse is short. Anticipates a change in trend from up to down on a break below the 2 or B point, and anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. And it works extremely well when the pattern sets up at significant areas of support and resistance, head and shoulders tops, head and shoulders bottoms, double tops, double bottoms, and more. Let's take a look at the basic mechanics. So here is an example of a 1, 2, 3 bottom. So when we're looking at a 1, 2, 3 bottom, we are looking to go long. We are bullish, expecting that stock or that futures, that currency to go higher. Okay, we're buying stock, buying call options, expecting it to go higher. Now, as the market breaks down and finds that lowest low and finds support and pulls up, we get our number 1. As the market retraces higher and pulls back, we get our number 2. As the market retraces down and stops printing these higher lows, we get our number 3. So 1, 2, 3 bottom traders, we're looking to get long on breaks or closes above the number 2. Now let's look at 1, 2, 3 top strategies. Same rules apply, but inverse. With 1, 2, 3 tops, we are bearish, looking for that market to go lower. So we're looking to go short the stock by put options, expecting it to go lower. And so here, the same rules apply. As we push up and find the highest high and pull down, we get our 1. As the market retraces lower and stops printing these higher lows, we pull back, we get our number 2. And then as the market pulls back down, stops printing these lower highs, we get a number 3. So you have a 1, 2, 3, and we are looking to get short on breaks or closes below the number 2. And one of the great things about these setups is we don't need to be glued to the screen watching this. We don't need to really worry about the first 2 legs unless maybe you're scalping. But all we have to do to cash in on these setups is be able to spot when it's about to go past the number two. Now, let's not waste any time because seeing is believing. Let's look at some chart patterns, okay? Now, this is a daily chart of 6A, the Aussie futures. Now, if you don't trade futures, you could look at FXA, the ETF. Forex traders could look at Aussie USD. You're going to see the same pattern. Now, it's a daily chart. And what we're looking for is to identify our number one, and that is a 52-week high. Now, we don't require a 52-week high or 52-week low. This is just a starting point. Now, we'll talk about ways later we can dial that in a little bit to find more setups. But for this example purposes, we're going to start with a 52-week high. So here's our number one. As the market retraces lower and stops making a lower move and pulls up, we get our number two. As the market retraces higher here by about 4 or 5 bars and pulls down, that gives us our number three. Now, we could have gone all the way up here. As long as we didn't take out the number one, we could have had a number three here, but this is where we stop. 1, 2, 3, and we know what? We know pretty much everything we need to know. We know that we are looking to get short on breaks or closes below the number two. That's pretty much the rules of the system. Now, you're probably asking, what about the other important ingredients of the recipe? Like, okay, I know where I'm getting in, but where's my stop or my risk? Where am I taking profits? Where am I putting limit orders in? All great questions, all very important. So what we do is we initially put or place our buy stop above the number one high, and our target is the distance between the high of the one measured to the low of the two measured down. So you'll see that right off the bat, it is a 1-to-1 risk to reward. That's okay, but we can do a little bit better. It's very important to let the market materialize in its anticipated direction. So we're looking for it to break down. And as we start breaking these structural lows over here, we can now move our stop to the next logical area. Move it from the high of the one to now above the high of the number three. So now we've quickly cut our risk here by maybe 60, 70, some odd percent, and we go on and reach our target objective of 225 ticks. This is a 1, 2, 3 top on a daily chart of Walmart. Again, we need to identify our number one high, which is right here. 52-week high, market pulls down, retraces back up. We now know everything we need to know about our setup while 98% of other traders are struggling out there. Where am I getting in? Where's my risk? Where am I taking profits? We know our initial risk is above the number one high. We know our initial target is between the high of the one measured to the low of the two measured down, which is about $5 in this example. Okay, we trade on down. Now let's look at 1, 2, 3 bottom examples. Okay, same action, same setup, but now in inverse. So here's a 15-minute chart of the E-mini S&P. Now you might say, does it make sense to look for a 52-week high or low on an intraday chart? No, it doesn't. So if we're looking at a 1 minute, 5 minute, 10 minute, 20 minute, 30 minute, whatever, we are looking for what we call session highs or session lows. So you know that our futures markets and currencies trade virtually around the clock, 23/6. So we're looking for session highs, session lows. Whenever you start your trading day, whether it's say 3 a.m. in the European Open, maybe it's the 9:30 Eastern New York Cash Open, maybe it's the last hour of the day, you're simply sitting and waiting for new highs and new lows. Okay, that's simple. So here we have a market trade lower, new session low that gives us a number 1 point. Market retraces higher, pulls back. We have a 1, 2, 3. Let's talk about entry options, okay? So an aggressive trader will work a buy stop, a tick or two above the number 2 high, and you're triggered into the trade. Now, an alternative method that I like is to wait for the market to come back and retest or come down and do what I call a second pass or a hook back above. Sometimes the market will, trigger up and hit target and leave you at the train station. That's okay. There's plenty of other opportunities. But sometimes the market will bust up above the number 2 roll back over and come down and stop you out. So this waiting for that second pass or hook can give us a second confirmation that the market does indeed want to go higher. Okay. Now here is a weekly chart of Apple. Hell of a way to catch some longer term position type moves. Here we have a multi-week low or a double bottom. We've got a 1, 2, 3 bottom pattern, and we get triggered here on this large bullish candle. We break above the number 2. We go sideways for about 4 or 5 weeks. We come back down, hook back up. That's our confirmation to get long Apple. How? Well, we can buy a stock, we can buy calls, we can buy call debit spreads or sell bull put credit spreads, whatever your flavor or style may be. Now let's look at some failed trades. We're all big boys and girls here. We know there's nothing guaranteed in life or in trading. This is a trade I probably took in my live account. Market grinding higher. New session high. 1, 2, 3. Aggressive traders are getting short right here. Or if you waited for the second pass, you're getting short right here. You're up a couple points. Now, if you exercise any money management, as we started making new lows, you move your stop from here to here, and you're stopped out when we retrace back higher. If you sat on your hands and didn't do anything, then you're stopped out right here. But guess what? We have a new setup. This high is greater than this high. So we have a new 1, 2, 3 pattern and a new short, which we go into profit. All right. Now, this is what I call a no trigger or voided trade. It's neither good, bad, nor ugly. And I'm going to tell you in a second why I love when these happen. So here we have a 1, 2, 3 pattern. We're looking to get long here. Market says no. We're going to go lower. We go lower, taking out that number 1 point. So guess what? We start the count over. 1, 2, 3. We're looking to get long here. Market says nope. I'm going lower. We take out the number 1 low. We start the count over. 1, 2, 3. We're finally able to get long in this last situation. So does anybody want to tell me what is likely going on in this situation? Does anybody want to tell me what's likely going on in this situation? If you can successfully, you get a star on your crown today. So let me see if anybody knows. What happens when we have price going higher lows, higher lows, higher lows, but if we put a stochastic MACD RSI and it's doing this with lower highs, what is that called? What is this called right here? That is called bearish divergence. Bearish divergence. So that is kind of a little secret or hack that adds some sprinkles on this already high probability trade setup. So trade management, a confirmation of entries on a break above the 2 or B point for a long or a break below the 2 or B point for a short. Exit strategies. If you're only trading, say, one contract, one share, one option contract, whatever it is, I'd say go for the distance between the 1 and 2. So if we have a setup that looks like this, we have a 1, 2, 3. It's uncanny, and we have our target here. It's uncanny how more often than not that it will often tag that almost to the tick and then reverse. So this is where I'd say, hey, take your profits here, look for a new setup. But if you're trading multiples, I'd say, hey, take a third, 2/3, half your position, whatever, off here, jack your stops up to break even and see if you can catch a free ride. Now, as far as balances and trails, I mean, you've got to figure out what works best for you. They come a dime a dozen, trailing behind moving averages, trailing behind 2-bar candles, trend lines. Figure out what works best for you. I like to target good old-fashioned, price action, pivot points, supply and demand levels. That's where I'm usually using to manage the balance of my trades, okay? Now, I've showed you that this setup works in any market, whether it's pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, and the Polish zloty. I've also showed you that the setup works on any time frame, whether it's a tick chart, a 5-minute, a 15-minute, hourly, 4-hour, daily, weekly, or higher. And I've also showed you that it works on any trading style. So I'm going to take a swig of water here. Let me know what your trading style is. Are you a swing trader, position trader, scalper, day trader, tick trader? What is everybody's trading style? And the reason I ask this is because you ultimately have to figure out what your bread and butter is. I'm not here to tell you that, hey, this strategy only works on a 5-minute chart of NASDAQ or a weekly chart of ExxonMobil, because it's not true. We're trading price action. If you can chart tulips and tea leaves, then it will work on tulips and tea leaves as well. So these are some of my favorite time frames here. I also like the 1 and 2 minute for day trading. And you could even get smaller. You can go to the 233 and the 610 tick for those that really like the action. But this right here is where I started, 20-something years ago, and that is my bread and butter. And then when I'm day trading, these are some of the time frames that I also enjoy, okay? So you've seen the proof. Let's look at some real trade examples. Not to say that the trade examples we've been looking at were fake examples. They were real by all means. But let's look at some trade examples we've utilized in some of our services. So I'm going to let you guys and gals kind of read all this on the right. I'm going to work on the chart from left to right. So daily chart of crude oil. You can trade full size. You can trade minis, micros, USO, OIH. You're going to see the same patterns. All right. And so here we have a 1, 2, 3 pattern. Okay. 1, 2, 3 pattern. We know days in advance all of our criteria. All of our criteria we need to place a trade. We know where we're getting in. We know our risk. We know where we're taking profits. Okay. That's what you need to know if you're going to get into a position. So we triggered into the trade. Risk is above the high. First target right here is equal distance between 1 and 2. That's $3,000. We hit our profit objective, and then we go sideways. So I get asked, Silas, does this work in range bound or consolidating markets? The answer is yes. The answer is yes. I'm looking for new highs or I'm looking for new lows, but people can trade these range bound 1, 2, 3s. They're trade the range bound 1, 2, 3s, and they can be very successful. So I'm sitting here waiting for a new high. We get that. New high. This high is greater than this high. We get a new pattern. And guess what? This is when we start getting really excited, because not only do we have a high probability pattern that I've been sharing with you, but we also know we're at a time of the year from a seasonal perspective where crude and energy markets in general tend to trade to the downside. So here we broke down. We had 1, 2, 3, 4 opportunities. If you're out playing golf, you're out swimming, gardening, whatever it is you do, you had 4 days to capture this. Triggered in the trade. We hit our first target of $4,000. And then we simply trail the market until we either get a reversal or we get stopped out. This market ends up dropping another $20,000 per contract on its way down. We might get a reversal here. We might get a reversal here. Market trades lower. We trade another $10,000 lower per contract before we finally get our last 1, 2, 3 bottom here, reversal, and we get a $5,000 move to the upside. Now, what I'm going to share with you in a minute is I want you to remember this chart and the subsequent charts, because I have something really special for you. So here, if you look at this chart, these 1, 2, 3 patterns are setting up over and over again. Let's go to gold. This is actually GLD, the ETF that tracks gold. I like to track the futures because it's a lot cleaner, more fluid, but you can track whatever it is you want. So if we look at this chart, we have a 1, 2, 3. We wait for the market to break down below the number 2. We reach our $4 profit objective. Market slides lower. People are subscribing to all these gold and silver newsletter. Gold's going here, gold's going there. Who cares? Follow price action. Price action will tell you where we're likely going. So here we get a new low, 1, 2, 3 bottom. We break above the number 2 high. We reach our $2 profit objective. Then we go sideways. People say, well, what about the stuff in the middle? Did you miss this? Did you miss that? Again, I'm looking for new highs or I'm looking for new lows. But if you want to trade the 1, 2, 3 here on the way up, or the 1, 2, 3 here on the way down, hey, by all means, help yourself. We start getting new lows. New lows, new lows. We finally get a last new low that's lower than this low. So this starts our count. Okay, this starts our count. So we have 1, 2, 3. We gap higher 2 days in a row. You wouldn't see the gap there on a futures chart, but that's okay. We come back down. We come back up, retest for that hook. That's our confirmation to get long. How? We're buying gold futures, full size, mini size, micros, buying GLD, calls, call debit spreads, sellable put spreads, whatever your flavor or style is. Okay, whatever your flavor or style may be. Okay, here we are. Gold, $19,000 move, $8,000 move, $24,000 move in climber. Let's go to Delta Airlines. I know this is becoming redundant by now, but I'm trying to make a point on how often these are setting up. I mean, every single day. Here we have a 1, 2, 3 bottom. We come back down and retest, hook back up. Here we have a 1, 2, 3 top. I don't personally trade the gaps. I've got students and members that will trade those, buying puts aggressively. We get another shot. This high, greater than that high. 1, 2, 3. Break down below. We get a small retracement. $8 move to the downside. Now all we're doing is waiting for a new setup. We have 1, 2, 3. We trade up. We come down. We hook back up. $8 moves to the upside. Okay, pretty cool. Here we are again. Longs, shorts, trading with either the underlying or options, whatever your style may be. Forex traders, 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Here we are driving lower. We have a multi-session low, also double bottom. Aggressive traders getting long here. If you wait for the retracement and hook back up, you're getting long here. You take profit. All you're doing now is sitting on your hands waiting for a potential reversal. Here's a 1, 2, nope. 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 Lastly, a 1, 2, 3. Trade down, we come up, we come back down and reach our 40 pip profit objective. Here we are, guys. All we're doing is trading the basic ebbs and flows of price that occur every day in every market. 80 pips, 70 pips, 35 pips, 70 pips, 55 pips. Day traders, 5-minute chart of the mini NASDAQ. New session low. 1, 2, 3. We break above, we come down, we hook back up, we reach our 13-point profit objective. New session high. We start to count over. 1, 2, 3. Break down. Have to pop some tums here. Finally falls off, reaches our 20-point profit objective. Now we have a new session low. 1, 2, 3. We break above. If you're lucky enough to get long on that retest, you're filled on your 30-point profit objective there in about 1 or 2 bars. All right, here we are. 137 ticks, 60 ticks, 91 ticks, trading the basic ebbs and flows of the natural market movement. Are you starting to see the power of this? So I'm going to ask you, why are you here? Why are you here? You're here to learn a simple, mechanical, done-for-you strategy for all markets in all time frames. And this is where I'm going to ask you, have I fulfilled my promise? Have I fulfilled my promise to you? I don't know if it gets any more mechanical, simpler, easier. There's really no guessing when to get in, no guessing where the market is likely headed, no guessing where to get out. I mean, if we had 100 traders looking at the same charts, we should have 99 seeing the same thing, right? Always one oddball out there that needs to overanalyze. I'm just kidding, but try to turn this into turn it into rocket surgery. We don't need to do that. We can keep things simple. Now, the one weakness or drawback of 1, 2, 3 setups is that there are so many of them. How do you catch them all without spending hours in front of your computer? Well, what if I could introduce something? Well, I say, but wait, there's more. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be pretty freaking amazing. You remember the recent case studies that we went over? Crude, gold, Delta, NASDAQ, and so on. Well, here we are with what we call the 3S code that plots everything for you automatically. I did this by hand for years, guys. And now we let technology do it for us. So you see the green arrows? That is your number 1 point. Your red arrow, that is your number 2 point. Your blue arrow, that is your number 3 point. 1, 2, 3. And before you ask, well, why didn't you code it to put 1, 2, 3? I get that. That would make a lot more sense. But unfortunately, it's a limitation of the technology and the platform. So if and only if we get a break below the number 2 or a break above the number 2, you'll see a little white chevron that's giving it's waving at you saying, hey, we have a confirmed or triggered pattern. Once we break, you're going to get these 4 beautiful lines plotted onto your chart. This is your breakout or entry level. This is your risk or stop. This is target 1, and this is target 2. Okay. Remember, target 1 is the distance between the high of the 1, measured to the low of the 2, measured down. And then TP2 is 2 times the distance of TP1. You see all these little green arrows. Like, what the heck is that? These are new lows. These are new lows. It's saying, hey, new low, new low, new low. The platform and the technology is hunting a new setup for you, a new potential setup. Okay. And we never get a confirmation here. We never get a confirmation here. Hence, no chevron, hence no pretty lines. Okay. Now, the gold example, here's our 1, 2, 3. We break above, target 1, target 2. Now we're looking for new highs or looking for new lows. Here's all those new 1 points. There's that last one there, lower than this low. 1, 2, 3. We plot it. We come back. We hit target 1, target 2, and now we're waiting for we're waiting for a potential reversal. Here's the Delta Airline example. There's your long, there's your short, there's your short, there's your long. And then here's the 5-minute chart of the NASDAQ. Okay, new session high, 1, 2, 3. We break down, hit target 1, target 2. Target 2 to the tick also happens to be a new session low. So we start to count over again. 1, 2, 3. We break above, we come down, we hook back up, we hit TP1. While we're waiting to hit TP2, we don't hit TP2. You can go see we go sideways. Don't quite hit TP2. It's close enough for government work. You should have lost any money. And we actually make a lower low. This low, lower than this low. New session low, 1, 2, 3. Market just breaks its little head there. 1, 2, 3. Market just peeps its little head out above the number 2. Comes down, hooks back up. Here we hit target 1. Here we hit target 1. And as we're waiting for target 2, notice we get new green arrows. These are new number 1s, cluing us in that we might need to get ready to reverse the trade. Okay, we actually hit TP2 right here, and then we get a new setup. 1, 2, 3. We break down, come back up, and we come down now, hit target 1 and target 2. All right, guys. So is this training for you? I mean, you only can answer that. If you're brand new to the markets and want to jumpstart your success, maybe you're an experienced trader and want to add another arrow to your trading quiver. If you're tired of all the noise that we talked about, want to eliminate the BS, indicator overload, paralysis analysis, you just want to simplify what you're doing. Maybe you already have a profitable strategy, and if so, that's great. It's great, but who wouldn't want to add another winning strategy to your toolbox? If you need or desire a specific step-by-step plan and avoid learning this all on your own, then this could be for you. This is something anybody can do, even part-time, okay? Now, this system, this strategy, this software will allow you to pinpoint setups like we have in Holly Frontier, long here, short here, long here, setups like this in Google, short, long. Who could have bought put options? Who could have bought put options or sold bear calls? All right. Who could have bought call options or sold bull puts? Yeah, we could all. There's many ways to do this. 4-hour chart of the Canadian dollar. Okay, 233 tick chart of the E-mini S&P. For those that love the action, 233 ticks. You're going to get all the action that you want trading a high odd, high probability setup. Now, why do all the work when we can let technology do the work for us? This is me running a scan or 123 tops across the Russell 1000. Only stocks that are optionable, $20 a share or greater. Hit the green scan button and I get my results. What would take me days, if not weeks, is now done in seconds. I've got a complete monitor with watch list, scanning for tops and bottoms across different assets, different time frames, and you can too. So this is Thinkorswim. We've had a indicator and scanner built for TradeStation. We've had an indicator and scanner built for NinjaTrader 8. We have an indicator only for TradingView. This is a 4-hour chart of Apple. If and when a scanner component becomes available, we'll build it. That will all be grandfathered in. MetaTrader 4, 4-hour chart of the Euro Kiwi. There's your long, there's your short, there's your short, there's your long. Wealth charts, we have an indicator and scanner for wealth charts. And we also have an indicator and scanner built for Metastock. So clean, so simple. Nice 1, 2, 3, a nice little happy smiley face when you hit your targets. That's all we're doing, guys. Trading, pure price action. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me a process, right? I'm letting my platform, I'm letting my brokerage platform scan the markets for me, locating those setups to find entry, and then I manage that trade through exit. You can start today profiting from these predictable patterns with what we call the 3S code. Now, here's the offer you simply cannot refuse. All this programming, coding, software development costs well into the 5 figures. There's 7 platforms, 7 different coding requirements, hundreds of hours of testing. But I realize that $3,000 is way out of reach for most folks. Hell, even $2,000, hell, even $1,000. I truly mean this when I say I want you to start on the right foot right now with a proven, mechanical, no BS, no guessing, straightforward setup that you can literally take and use for the rest of your trading career. So we've made this absolutely and completely affordable today for those that are willing to take action and get in right now with today's offer. We've opened up 25 slots. You're going to get access to the 3S code indicator, the 3S code scanner, the 3S code optimizer, access to our live weekly strategy scan and trading sessions, access to our Telegram room, and all of our quick start guides and bonuses. You can get started today by going to tradestraining.net/code, or you can call 502-383-1182. Tradestraining.net/code will get you started right now, and I'll put that into, okay, thanks. Thank you, Dave. Dave, put that in. Tradestraining.net/code. This is a one-time lifetime access fee, guys. There's no renewals, there's no subscription fees, and you can load this on multiple platforms. We don't limit this to well, you only use Ninja, send me your Ninja license, that's it. You can load it on all 6, 7 platforms if you wish. You can load it on your desktop, you can load it on your laptop all at the same time. We want you to have success, okay? Now, with this package, these again are the indicators that you'll get access to: Thinkorswim, TradeStation, Ninja, TradingView, MT4, Wealth Charts, and Metastock. Keep in mind that TradingView is the only one out of this 7 here that doesn't have a scanner. But as a reminder, if and when we're able to build that, that will be grandfathered in to this package. Now, we also offer a payment option through PayPal. For those that like to use PayPal, you'll see that on the big blue button, tradestraining.net/code. You can use that to do a direct purchase or finance if you wish. It's a really great tool. Now, the weekly strategy and scan sessions here, what do we cover? When are they? In fact, they're every Thursday. So tomorrow, every Thursday at 11 a.m. Eastern, we go over my top setups. We talk about day and swing trading using 3S code, using options, trading minis, micros, and more. Those are all recorded and archived in case you can't make the live session. And the indicator and scanner, again, I just want to make sure it's crystal clear that you understand what you're getting access to. You're going to get a visual plot of that 1, 2, 3 top and bottom. entry, exit, stop, and target levels, all color coded. A lot of it's customizable. If you don't want red, you want hot magenta, you don't want yellow, you want orange, you can use multiple look back settings. You can scan for setups only or trigger only or both. What does that mean? So you can scan for markets that have triggered, or you can scan for markets that are setting up to trigger. Okay. You can scan for intraday setups, swing setups, position setups. You can same time. You can scan for stocks, futures, ETFs, forex, all at the same time if you wish. Everything is customizable. We're also going to include our 3S code optimizer, where you can now take the mechanical top and bottom strategy and create and run multiple back tests against various inputs for those that like to tinker, the tinkers who like to tinker. This is me running the optimizer here in crude oil in Thinkorswim. Here I'm running the 3S optimizer on the British pound that give you all of your stats. Here I am running it in TradeStation that give you all of your stats, all the trades, and then here in NinjaTrader where you get all the stats that you need across your different variables that you may have chosen. All right. With this package, again, throwing in additional bonuses just to make this an absolute no-brainer. This manual chart pattern principle trade manual guide will help jumpstart you by teaching you how the markets work, why markets move the way they do, who the players are, how to look at and understand the market the proper way, bonus setups, and how we use the power of seasonality to trade the 1, 2, 3 pattern. You're also going to get access to my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a very powerful trading instrument if you know how to use them properly. So it's important for me to include this so everyone can take advantage of options if they wish to do so and do it the right way using the 3S code. Bonus 3 is access to our private Telegram room. Every single day, I'm posting trade ideas, I'm posting research, I'm posting analysis. Could be a stock, could be a future, could be a currency market, showing you how we use this tool and our other tools in action. And these are some posts. You get a 3S code sell set up here in Nucor. We had this 3S code sell set up there in Cardinal. Here were setups in the E-mini S&P, target 1, target 2, target 1. Here was a setup in Moderna. We had that short followed by a long. People are trading the underlying. People are trading options on these. And thing is this, guys, is that these right here, these are folks that are taking action. You will not see results unless you take action. And these are very humbling to me. These come in all the time. I don't ask for them, but these are people that have taken what they learn, following a simple, repeatable mechanical pattern, not turning it into something that is confusing and complex, trying to turn it and seeing something that doesn't exist. They're just trading the pattern and they're seeing success. So who is ready here to get started? Go to tradestraining.net/code. And what I'm going to do now, I've got a few minutes here. This is your complete offer. What I'm going to do is open this up for questions. I think I've got a few minutes here. And what we'll do is also look at some live charts. And we'll take a look at some ticker symbols here. So let's see here. Let's do this. Let me ask some questions. Riding up or down to get to 3 is the goal, but how do you know when the 3 is the top or bottom? Our software does that for you. And when you talk, it's not necessarily looking for a reversal bar. So you guys can see right here, we have long setup here on the 2-minute. This is a 2-minute chart here. If you look at, we're looking at gold. Let's see, gold. So if we look at gold, we have a 3S code top in play in gold futures. right here. We're about 50% or so to its objective, 50% or so to its objective. I'll show you some trades that I recently took here in the euro currency and the Japanese yen on the hourly chart. So computer's running a little slow, guys. Got a lot of stuff going on. So this is a euro currency trade that I took right here. It's actually short call options here off the daily chart. You see we just tapped into target one. The prior signal was this 3S code buy over here in the left. But this was one I took with outright futures here, getting long at 111.42. And then I was also took this Japanese yen trade right here at 67.90, which was also coming off a 3S code sell. Ish Han says, what did he say on TradingView? I use TradingView. That's why I'm asking. Oh, Scanner. Scanner is not available on TradingView. RR Travel says what is not included. I'm not sure what you're asking. What do you mean? What is not included? So this is what is included right here. You're going to get the indicator for the 7 platforms I shared, the scanner for the 6 platforms I shared. The only one where there's no scanner is unfortunately TradingView. That's my primary platform. Optimizer, access to weekly strategy and scan sessions. So if you get on board today, you will have access to this tomorrow. And I'm looking forward to seeing you. And you can ask questions, and we'll deep dive into the indicator and look for setups together. They are recorded in case you missed. Private Telegram room access, and all of our quick start guides and bonuses. So if I can find my Telegram room, see. So right here, posting ideas every day, posting ideas, charts, and that way basically I'm giving you fish while you're learning how to fish, and we fish together. Something on trading is not really, he drew an X. Did I answer your question, Ish? Did I answer your question? Okay. Cool. No, does not repaint. Does not repaint. Good question there. How do you get access to Metastock? So the Metastock and wealth charts, when you go into the members area, there will be just a little submission form. You're going to put your email in there, and that will fire it off to the wealth charts team and or Metastock. That way they can unlock it or do whatever magic they do on their side. As far as the others, you'll have basically immediate access. And our team will unlock it for you on TradingView. And yep, you can load it on multiple platforms. Day and swing trading for sure. So with options, excuse me. So with options, let's go back here. So with options markets, what I'm looking to do, and it's kind of faint, and you guys can change these settings. You can change the colors and stuff. So on a short setup, with options, I like to sell credit spreads personally, but when we get a confirmed pattern, you can buy puts, you can sell bear calls with bullish positions. You can buy calls and sell bull puts. So think about this. Think about so basically a high probability reversal trade. So you know that you're buying cheap options and selling expensive options if you like to sell premium. Yep. Awesome. Just scrolling up here to make sure I answer everybody's questions before we leave. One more chart. Can I look at Apple? Let's see. Go to Apple, and then I'll turn it back over to Mr. Costmiter and the gang. So here we are in Apple. Yeah, so if you look at this, we've had pretty good hit rate here. That would have been a loser. We had a winner here, winner here, winner here. We went about 50%. So kind of a general rule of thumb. You can manage your trade however you wish, but if we hit if we get about 50% to profit objective, I'll move my stop to break even. But this one right here, this is a very large, wide 1, 2, 3. So there's going to be more risk. Um, so in that case, you just size down your position accordingly, or just avoid. We got a lot of markets that got skewed, not screwed. Well, I guess screwed or skewed when we had that big volatility event there, the 1st of April, the tariff headlines, and so um, there is still reliable, but just be cognizant. The wider ones will until a little bit more risk. All right. Well, I want to thank everybody that's coming on board. I mean, this is a one-time, lifetime fee, guys. I mean, I don't know that it gets the value there. It's any better, especially access to all platforms. I don't need your licenses, and you don't need to say, "Hey, unlock it for this, unlock it for that." You're going to get immediate access, and the best thing is that we get to go in the markets live together starting tomorrow, and that is your best opportunity to answer or ask what questions you have in a real market environment. We dissect it together. It's a lot of fun, and more often than not, man, you'll cover that there. You'll cover that cost in one trade. Nope, because once you get in and access, I cannot get it back. So it's yours to keep. All right, Mr. Cost-Biter, I'm going to give it back to you. Thank you so much for having me on. Always a pleasure. Look forward to catching up, hopefully this week or next when you have a chance. Good luck with the event. Thanks again. Everybody take care, and we'll see you in the markets.